Hello, Chris Smith at Union Home Mortgage. Hey, I want to talk to you today about the do's and don'ts while getting a mortgage or looking to buy or after your pre-approval. There's a lot of them, so let's go over them together. Super, super important, okay? There's a lot of big brother stuff, so they always find out if something's been done. So the more importantly is credit reporting. So I say during this process, try not to get your credit pulled. If you have to get your credit pulled, you let me know first so I can kind of help navigate that with you. Okay? So there's another video on my website that you can see, and it talks all about credit reporting and all the rules that's involved with that. It's very, very detailed. It's an awesome video. Just a lot of great information that most people don't share, and it's further. When I first studied that information about a year ago, it was more than I ever knew in 13 years of financing. So I go real deep. So watch that video. That's important, okay? But if you're going to do anything, make any financial decisions, we have to have that conversation, okay? That way, one, I'm aware of it. Two, because it could impact your approval. So these are the times where you walk in, and I love deals. I love a great deal. When you walk in and, hey, it's no interest, no finance, or hey, I see you're going to buy these clothes, or you're going to buy this or whatever, and if you open a credit card today, I'll give you $5,000, whatever, okay? The answer is no. We're not going to do that today. You're not going to get that card. I promise you, the next time you come in or a year from now, there'll be some kind of other deal. And once you're done and you're in the home, you can do those things. So refrain from that. Refrain from getting your credit pulled. Here's another big thing, and it happens, and it drives me crazy because these salesmen take advantage of people. You're buying a house. What happens when you buy a house? Well, a lot of things. But what do most people upgrade or have to get? Furniture. So you're closing in 2 weeks. You want that new couch. You go and you look. It's on sale. The salesman says it's on sale until today at 4, and it'll never go on sale again. And it's the lowest price that it's ever been in recorded history. And you got to do it by 4, or you're going to lose it, and your life's going to be over. Okay? So there's all this pressure, and you have to get it. And you say, but no, I can't do it because my mortgage person told me that I can't do it. I can't get my credit pulled because then plus the payment and all of that other stuff. And they said, don't worry. Don't worry. I'll fill out this application for you. We'll secure this price for you, and then we'll do all that later because it's a 0% financing, things like that. Now, back up. If you want to pay cash or on your current credit card, anything current is fine. Okay? If it's a current credit card, you can charge it up or whichever. That is fine. Okay? But if it's a new card that they try to get you, which they normally do, it's no interest, no financing for whatever, some great awesome deal, they will, because I get paid for that too, they'll say, don't worry, I'll put it on this application, but I won't turn it in until you're done, or it won't run until much after your loan closing. It doesn't. They fill it out, they turn it in, and they immediately charge it because they pull your credit because they want to make sure that you're going to qualify for that, and then your credit's pulled. And more times than not, I can promise you, 9 times out of 10, it always goes through. That loan goes in the process. Okay? So we've had this happen. What has to happen is within so many days of closing, typically it's 5 to 3 days. Normally it's 3 days, and sometimes it's happened within 24 hours. Okay? There's Big Brother systems. Okay? We write through. We're a direct lender, but there's Fannie Mae, there's FHA, there's VA, USDA, all of these. Some are government loans, but they're all kind of governed. There's laws around it, and there's regulations. They want to protect themselves. So what happens is before closing, they kind of run what's called a soft check on your credit. It's in the background. It just kind of happens. It's not pulling your credit, but they will find out, and they will report to us if your credit was pulled, and especially if you opened up a new account. We'll know what that is in the payment. And let's say the qualification was tight. Everything got done the day before closing. You try to sneak in that furniture sale. All of a sudden, boom, that comes in. You don't qualify. We're not closing. I may be able to restructure the loan, and you may qualify and say, hey, that payment was only $100 a month, but you're a fantastic A++ borrower, and you still qualify. Are we still closing tomorrow? Because what has to happen? That file needs to go back into the process to underwriting. Okay? Got to give an underwriter, even if they turn it same days. I mean, we move stuff, but it goes back. Okay? And then you have to go back and change everything, and it takes time to do those things. So don't do it. That's the big thing. Credit pulls? No. Okay? So with that, the next topic I want to talk about is, and you think that this is pretty comprehensive and common sense, but it happens more times than not. Do not quit your job. If you want to quit your job, I don't recommend it. You're buying a house, but you got to do it the day after the closing. You can't even do it the day of closing. You can't leave the closing and run out and quit your job. It would have to be the next day before you would do something like that. And I'm not advocating, all right? I don't want to get in trouble. I'm not saying quit your job. We're qualifying you. The lenders, any lender is qualifying you on that income. You can't quit. What also happens 24 hours to closing? They pick up the phone. Hey, Bob's still working there? Okay, great. Just want to make sure. That has to be done before 24 hours. If they say, no, you resigned yesterday, not closing. You might say, but Chris, and I've had this. 3 weeks before closing, I was offered this amazing job, but the thing is I had to start right away. Okay, fine, I get it. We need a copy of the new contract, and typically, not always, okay, I get around this sometimes, but they like to have the first pay stub depending on the program. Sometimes, if it's a strong offer letter and they say, you are guaranteed this salary, that's easy. If they say, hey, we're going to pay you $20 an hour or $15 an hour, and we guarantee you 40 hours a week, that's kind of a no-brainer, okay? A lot of places don't do that. If they say, hey, you know, we're going to pay you $16 an hour, and you're going to work, you know, an average, it's a full-time, but they're not guaranteeing an hours, and that's kind of wishy-washy. That's not going to be so easy to fix, okay? So you need to have those conversations. I have people where I find out the day before closing, oh yeah, I quit my job, and they don't tell me that, even though I told them not to do it. Then we got to fix it because they think nobody's going to know. It will all get sorted out. If you communicate that with me, then I will be able to figure out a game plan so we can get this done, if possible, and still close on time, okay? So those are the big thing. No major purchases, okay? Refrain from getting your credit pulled. Don't open up any new accounts, no matter what. Don't quit your job, okay? So those are the big do's and don'ts. There's others we can go in the deep, but that's the main things that can cause a huge hiccup in a loan, okay? Any questions? As always, give me a call. Depending the platform that you're watching this on, there should be links all around the screen, and it's real easy to get in touch with me. All right? Talk soon.